So yes, to the person's question specifically, there are lots of vacant properties. The question is, what types of properties? If you check, they are not good quality properties, and they did not build to the demand and expectation of the market.
Good morning, everyone, and welcome to the Real Estate Outlook 2022 that's hosted by Fine and Country. Very delighted to be here, and I hadn't even thought about the uptake in luxury assets, following the crash, unfortunately, that happened in Ikoyi. But I guess with challenges come opportunities, and it's in identifying those opportunities you then separate the wealthy from the not so wealthy. And I think it's a very interesting time for us to go into the main session for the day. We will be taking a deep dive into some of what Ikena shared, including the growth opportunities around the 2021 review and the 2022 preview of the real estate sector, with focus on luxury residential and prime office space. So on that note, I'd like to just have Mrs. Okonjo on to share the initial discussion point or presentation.
Thank you very much, Asiri. What I will do is actually see if I can share just some of the highlights of what Ikenna was referring to and use that as our backdrop for the conversation with my colleagues. So he had highlighted some of the luxury projects in terms of the pipeline of luxury residential, and ranging from the Belmonte, Cardwell by Cardwell, the Luxuria, 39 Bordelon Heights, 27 Bordelon, various tall buildings. So what we see happening in the luxury segment, especially in Ikoyi, Victoria Island axis, is clearly a rise in tall buildings. So we might say Lagos rising, Ikoyi rising, Victoria Island rising. There's also a dichotomy that's happening where we have the Naira projects, dollar projects. Obviously, the astute investors who are investing in luxury developments tend to stay with what we refer to as the dollar economy. And so that's one of the ways in which they hedge their returns. And obviously, with all of the fluctuations around the Naira, it's just that much more risky to work with Naira-based projects. And so from the last 3 to 5 years, the top developers have basically stayed in that dollar economy within the Nigerian market. However, we have some micro segments within that luxury space where some developers, in a sense, refer to themselves as affordable luxury. And you will find most of those in the Naira space, where you may have properties being priced in Naira, even though they're also tall buildings, anywhere ranging from 8 floors to typically about 12 floors. It's instructive to note that obviously the taller the buildings, then obviously the more sophisticated the construction that is required, and obviously the cost, the investment in there, and that's reflected in the pricing. So your average prices with residential spaces in the luxury segment ranges anywhere from the low 2000s, about $2,500 per square meters, all the way to $4,500 per square meters. Now, these are asking, what's typically achieved is more somewhere in the middle, in the high 2000s, about $2,850 to about $3,500. Obviously, when you start talking about the very exclusive spaces like the penthouses, then you start talking really $4,500 and up. Now, that's really for the 0.1%. Now, it's important to recognize that in the luxury segment, we like to say that desperation does not go with luxury. And so most of these developers are ready to obviously wait and work with their target audience. And so you find that the typical timeline for most of these projects is really anywhere from 4 years to about 7 years. So the luxury real estate space is actually for patient investors. And these are investors who are typically either industrialists, they're investors in other segments of the economy, whether it's the financial institutions or some corporates that have obviously capital in the country, and that capital has been dedicated to the Nigerian market. And so one of the ways in which they're diversifying is to actually then invest in luxury residential, because that's an area that helps them hold the value of the monies that they have within the country. In addition, moving on to the commercial segment, we also find that some of these investors are also similar. You have some of the multinationals, some of the big public-private sector, similar to what Ikenna just mentioned with regards to Kanti Towers, investing in some of these commercial buildings. And so you have corporates, and then you have ultra high net worth investors. So he referred to Pampa Towers, which is obviously coming in this year. The Dangote Tower also is coming in sometime this year. So you begin to see the profile of the types of investors who are investing in these commercial buildings, partially for their own use, and some of that space will be put into the market. One of the key characteristics of these types of investors, because some of them are actually not necessarily referred to as developers, strictly speaking, they're really investors, is that they're patient and they're very selective about the clientele that they will admit into their properties. And for some of them, they would hold these properties for quite a long time while waiting to attract the right investors. So sometimes that can absolutely distort the market. That's something to pay attention to. One of the trends we've seen recently is actually investors who are obviously worried about, their Naira stack, and as a result of not being able to necessarily convert their Naira to dollars or take it out of the country, are now looking at real estate as a safe place to invest. So they may not have all the funds, but they're willing to go into collaboration. So we expect to see more of those high-level, high net worth clients coming into collaborations for really mega projects, such as some of these commercial and residential luxury spaces. As far as the figures in the commercial space, the numbers are really all over the map. It really just depends on the locations, from Ikoyi to Victoria Island. And of course, we have the assessment of your grade A offices, strictly speaking, because they are set technical criteria for assessing grade A offices locally and internationally. Then you have the grade B offices, and then you of course have offices that really neither fit into any of those categories. And you begin to see the reflections of their pricing in the type of properties that they are. At Fine and Country, obviously, we focus more on the grade A offices and a handful of grade B. So we've reflected some of those figures on there in terms of just across the board, some of the general pricing. The one last point that I'd like to make, and then hand back to you, Siri, I can contribute to further discussion subsequently, is that flexibility is the name of the game. Whereas many years ago, many investors, many developers, landlords of these offices were inflexible. In the last 3 years, COVID, lots of movement, downsizing of offices and all of that, there is a clear sense in which landlords are now being extremely practical. They're giving lots of concessions. Some may not give the discounts, but those discounts come because they don't like the D word, but they come in terms of concessions, they come in terms of rent-free periods, they come in terms of fit out, allowances, and all of that. The really astute investors sometimes want to maintain a minimum threshold as far as the price per square meter in the commercial space. And the reason for that is because obviously some of these assets are being held to sell off, to investors or to put into REITs. And so the pricing per square meter is important to maintain and to protect. And so they would rather give concessions and other value areas rather than affect the price per square meter. So that's the additional context that I thought to share. If there are any specific questions, we'll take them as we go ahead into the conversation. Thank you very much, Asiri. Back to you.
Thank you, Mrs. Okonjo. We actually do have a question. Don't you think in real value terms that some of these luxury properties are overhyped and overvalued? And it's probably the reason why most remain vacant so long.
Thank you, Asiri, for that question. For as long as I've been in luxury real estate in Nigeria, I've heard the same thing. Obviously, well, not so obvious, but we came into the market in 2008, 2007. It was the height of a recession. We've been through, I think, 2 or 3 recessions. So basically it means that at every point, we're literally grappling with a market where it appears, there isn't enough demand. But for whatever reason, things in Nigeria seem to defy logic. The one thing we have to recognize, when people say there are lots of vacant buildings, is I always ask the question, which ones? Akin referred to 4-body loan, top quality, fully sold. As I gave indication earlier, typically they will take anywhere from 4 to 7 years to construct, and usually they're sold out within that time. Now, from a luxury developer's point of view, that is success. Success is you prepare a product, you present it to the market takes it. And if they paid for it, they voted with their money. When it comes to the tenancy side, for those who bought as investment, when it's fully rented and we have a wait list of corporates or high net worth individuals who are looking to occupy those types of buildings, then really that idea that there are lots of vacancies really then brings up the question, which buildings? There's definitely a flight to quality, and we can't even overemphasize that in light of that tragedy that happened last year. The flight to quality is even more so. So from the perspective of the size of the market in terms of, Lagos, in terms of Nigeria, our population, what Lagos represents in terms of, the Nigerian economy, the West African economy, or indeed the African economy, we've really not started yet. We don't have 20 or 50 tall buildings in Lagos that you refer to as luxury residential. So from that point of view, the people who invest in those particular segments are accomplished, especially in the last few years with the pandemic. There's a more philosophical approach to some of these investors, where they're now looking and realizing that actually we work so hard, we have this money, let's invest it. So some people who maybe lived in BGC or lived in some estate, where now they're dealing with a lot of traffic, for example, or they're downsizing because their children are now, they're becoming empty nesters, that sort of thing. And where they were conservative in the past, now they're reconsidering their whole lifestyle. To Odunayo's point about, location. In the past, we used to say location. Now we say location, lifestyle, because there's a sense in which the trend that we're seeing is that these investors who invest in the small segment, which is really the upper quartile, we have to recognize luxury is not really for everyone. So yes, to the person's question specifically, there are lots of vacant properties. The question is what types of properties? If you check, they are not good quality properties, and they did not build to the demand and expectation of the market. Good quality projects have strong, demand and therefore results. To the point about lifestyle, there's a sense in which some of these investors are actually now retaining, their homes in places like, say, VGC. Some are even buying in Lakowe, for example, and then have what they refer to as their city location. So the concept of lifestyle and location is now something that we have to start looking at, where it's not just about central Ikoyi, for example. If you look at the price per square meter for Lakowe, which is so far-flung, you then begin to see that there's the idea of people can go there and play golf. People can go there and stay in their villas on this green, beautiful lifestyle estate. Twin Lakes will give that same sort of thing. If you want to stay there as your retirement, that presents some measure of luxury. So the idea is now a bit more fluid, as we're also seeing internationally. So to the specific question about, why do we have this sort of positive expectations when we have quite a bit of vacancy? The answer to that is that a lot of those vacancies, the properties are not good quality. Of course, in some cases, they also don't have professional representation, but it's more around quality and, a fit for the market. To the point of, why are these prices so high when it doesn't reflect what's going on in the economy? And Akin, rightly said, it's an exclusive market. Indeed, it is. In addition to that, I want to add that it's a global market. We've always been in a global market, but even more so in the last, few years, and certainly COVID fast-tracked that. So the average investor, or the typical astute investor, is thinking, where do I get the highest return for my money? And so if I bought land in Banana Island years ago when the exchange rate was, 100 and something, and it was $1 million, and then now it's 700,000 naira per square meter, not much has really changed. So what happened during the pandemic was that we found a lot of people obviously wanting to preserve their naira because of just the fluctuation. And then the prices started going really high. Lots of people were looking to invest. Even we were actively looking for investors, looking for land for investors. And it literally moved from about 500,000 to 700 to now. Banana Island is in the high 800s to 900, as it were. But when you actually check it, you find that in dollar terms, it's not dramatically different. So most of these investors, when they think from the point of view, if they've made these investments overseas, so there's all that comparison going on, which also then brings us to the diaspora market. There was a point where the diaspora found the fluctuation and the devaluation of the Naira to be an opportunity. However, in today's world, there is a real challenge for a diaspora investor in thinking, if I bring my 100,000 pounds today, yes, I convert it to this, but in a few years, if Naira devalues to what, 2,000, where is my gain? So there's all those conversations. So at the end of the day, the luxury market is reflecting the fact that the investors are actually global investors also, in addition to the limited supply. And then just quickly to that question about the regulation, I think I spent a lot of time on that particular question. So perhaps I yield the floor to Mr. Ojo, just so that we're also mindful of the time.
Thank you, Mrs. Okonjo. Just so we can get into the session where we now start to give recommendations that I'm sure our listeners would thoroughly appreciate. Recommendations to investors and also intending property purchasers.
Thank you so much, Asiri, and great recommendations all around. For me, I would like to stick with the three concepts that I had left in the chat earlier, which is, the idea of credibility being an overarching factor for investors, those who are buying, the end users, whether it's in residential, is the middle market, luxury market, at whatever level, you want to look into the profile and the credibility of the developer that you're buying from. If you're renting, the same thing. You cannot overestimate the due diligence in real estate. It's a very critical asset class. It's probably the one asset class or the one investment that, obviously takes up a lot of money from anybody, whether you're a startup, whether you're starting in your early investment or you're an advanced investor. So credibility is critical. The tragedy that happened last year really underpins that. It doesn't matter the location. Real estate is not about friendship. It's not about, it's not an emotional conversation. It's a very commercial transaction. Therefore, tough questions need to be asked. We have a 20-something due diligence questionnaire that we use before we engage or take on a developer's mandate. And a lot of them go to the profile and the credibility of the developer, the track record, have they done this sort of thing? So credibility is super critical. Are they following the regulations, the zoning? Do they have approvals before they start selling? All of those things, super important. So that's credibility. The second thing is something that, some of my colleagues have referred to, creativity. We are in a world that is fast changing. Change is the one constant thing. And so any investor that sticks with the one track mindset of this is what people were buying before, and this is therefore what I'm going to build, without taking into account the fact that there's a fast changing world that we're in. The young millennials are coming, they're building tech companies, therefore they're getting onto the property ladder that much faster. And so if you're only thinking about older people, and you're not thinking about the younger, the millennials, and in terms of even in our luxury segment, then it means that you're not really thinking creatively. The way that they live is totally different. Lifestyle means a different thing to a millennial than it means to, say, somebody who is above 60 or 50 in their 50s. So credibility, creativity, and my third would be collaboration. So whether at the end user level, entry-level investors could do well to think, as Mr. Ojo mentioned, instead of thinking price, think quality, think long-term value. And so from that mindset, if you want to preserve your investment, so instead of buying some far-flung plays that may not really appreciate in real terms when you convert from Naira to dollars, because we must all be thinking in international currency, even if we're local, you're probably better off collaborating to invest in a better location, in a better asset, in a better property, so that long-term you have, better value to extract. At the development level, the same thing. Instead of trying to be this super developer that owns this 20 high-rise, 20-story building, and you don't have enough funding, and therefore you end up with a building that is not properly funded, better to get into a collaborative investment vehicle, and therefore, deliver something that is qualitative. So those are three critical things. And, I would just wrap up by saying location, lifestyle. We need to start thinking about other locations that are not necessarily city centers, and think, what are people looking at from those types of locations? And that would take some creative thinking. Thank you, Asiri.
Thank you, Mrs. Okonjo, for doing justice to all those questions that were asked. One question that came to mind for me while Mrs. O was talking about the 3 C's on collaboration, creativity, and credibility. The watchword for me at that point was sustainability. And we're seeing a lot of rise in ESG concerns now, where a lot more investors are pushing funds to projects that are sustainable. And that is also attracting a new segment of the market, which are the millennials. And what we've also seen is an increase in share value for companies that actively have ESG as part of their risk frameworks, and also infuse that in the products that they bring to market. So from the standpoint of all of the skyscrapers, I know in Africa we don't emit so much carbon, but we're right now at the peak in nature where a lot of action is now being taken to cure what had been done by other countries that had emitted all of this carbon, and we can't be left out, unfortunately. So as we build all the skyscrapers, how are we thinking about the emission of carbon? What are some of those creative ideas as well that can be brought into real estate, and also attract the right investment, but also start to capture more value in that space? I'd like to hear a few thoughts on that, perhaps from any of the speakers on the panel.
Thanks for bringing that up, Asiri. I think it's critical. I think that in today's world, the idea of climate change, the idea of sustainability is something that could be a competitive advantage for any investor or developer. One of the buildings, Nest Oil, which is a mixed-use development, actually has a LEED certification in the silver category. So we're beginning to see investors take that seriously. And as a matter of fact, some corporate tenants actually look out for buildings that have, these technical certifications that demonstrate that these are being considered. So I expect that we'll see more of that going forward in the Nigerian real estate market.